Welcome. Today, we're breaking down the different types of life insurance to help you understand which one might be best for you. Protecting your hard-earned life with the right kind of life insurance is just plain common sense. So stick with me for a few minutes while we clear up the confusion about life insurance and get you on the right track. Let's dive in. First up is term life insurance. Think of it like renting coverage for a specific period, say 10, 20 or 30 years. You pay your premiums, and if something happens to you during that term, your loved ones get a payout. Now, the great thing about term life is that it's usually the most affordable option, especially if you're young and healthy. It's like buying insurance for your car. You only pay for the coverage you need when you need it. But remember, just like renting an apartment, once the lease is up, your coverage ends. If you outlive your term, you don't get anything back. Stick to the basics, get the coverage you need, and keep it simple. Bottom line, term life insurance is a great way to protect your family's financial future without breaking the bank. Now let's talk about permanent life insurance. Unlike term life, which is like renting, permanent life is like owning. It's coverage that lasts your entire life as long as you pay your premiums. There are a couple of different flavors of permanent life insurance, but the most common ones are whole life and universal life. Whole life offers guaranteed premiums and builds cash value over time. This cash value grows tax deferred, which means you won't owe any taxes on it until you withdraw it. Universal life is a bit more flexible. It lets you adjust your premiums and death benefit, which can be helpful if your needs change over time. But be careful, because those adjustments can also affect the cash value of your policy. Permanent life insurance can be expensive, but it's an investment, just like buying a house or putting money in your 401k. Let's dive a little deeper into whole life insurance. It's like that rock-solid foundation you build your financial house on. With whole life, you're getting guaranteed premiums that never go up, no matter what the stock market does or how old you get. Plus, whole life insurance builds cash value over time. Think of it like a savings account that grows tax deferred. You can even borrow against that cash value if you need to for things like your kids' college or a down payment on a house. Some folks might tell you that whole life is too expensive or that you're better off investing the money yourself. But with whole life, you're forced to save, and that cash value is there when you need it. It's like having a financial safety net that's always there to catch you. Now, if you're looking for a little more flexibility with your life insurance, universal life insurance might be a good fit for you. Unlike whole life, which is pretty set in stone, universal life lets you adjust your premiums and death benefit as your needs change. Need to lower your payments for a while because money's tight? You can do that with universal life. Want to increase your death benefit to keep up with inflation? Universal life lets you do that too. Universal life policies are a little more complex than whole life, and the cash value growth isn't guaranteed. It's tied to the performance of the investments your insurance company chooses. But if you're comfortable with a little more risk and want the ability to customize your coverage, universal life could be a good option. Now, for all you lovebirds out there, let's talk about joint survivorship life insurance. This type of policy is designed for couples who want to make sure they leave a legacy behind for their loved ones. It's basically one policy that covers two people, and it typically pays out after the second spouse passes away. This can be a great way to cover estate taxes, pay off debts, or leave a financial cushion for your children or grandchildren. Joint survivorship life insurance is definitely worth considering. Now, if you're the kind of person who likes to be in the driver's seat when it comes to your investments, variable life insurance might be up your alley. Variable life is a type of permanent life insurance that lets you invest your cash value in a variety of different investment options like stocks, bonds, and mutual funds. The potential upside is that you could earn a higher rate of return than you would with a traditional whole life policy. But here's the catch. With higher potential returns comes higher risk. The value of your investments can go down as well as up, which means your cash value and death benefit could fluctuate. It's important to have a solid understanding of investing and be comfortable with some risk before you jump in. Now let's talk about a specific type of life insurance that's designed to protect one of your biggest assets, your home. Mortgage life insurance is pretty straightforward. It's a policy that pays off your mortgage balance if you pass away before the loan is paid in full. This can be a huge relief for your family, especially if they wouldn't be able to afford the mortgage payments without your income. It's also important to shop around and compare quotes from different insurance companies because premiums can vary widely. Now let's talk about dependent life insurance. This type of coverage is designed to help your loved ones cover expenses if something happens to a child or a non-working spouse. It's typically a smaller policy, just enough to cover funeral costs, debts, or maybe a little bit of living expenses. Even a small policy can make a big difference for your family during a difficult time. It's about giving them one less thing to worry about when they're grieving. Plus, dependent life insurance is usually very affordable, so it's not going to break the bank. Let's be honest, nobody likes to think about their own funeral, but it's a reality we all have to face eventually. Funeral pre-planning life insurance is a way to take care of those arrangements in advance, so your loved ones don't have to deal with the financial and emotional stress of making those decisions while they're grieving. It's all about taking care of business ahead of time, so your loved ones can focus on what really matters, honoring your memory and supporting each other. Finally, let's talk about final expense life insurance, sometimes called burial insurance. This type of policy is designed to cover those end-of-life expenses that nobody wants to think about, but everybody has. We're talking about things like funeral costs, unpaid medical bills, and even credit card debt. Final expense life insurance is typically a smaller policy, usually with a death benefit of between $5,000 and $50,000. It's a way to make sure your loved ones aren't stuck footing the bill for those unexpected expenses during an already difficult time. Figuring out that you need life insurance is the first step. Now that you've learned a little more about all the different types of insurance, things should be a little less confusing. We're here to help you break through the clutter and learn more about the most popular kinds of life insurance, so you can decide what's best for you. Thanks for watching, and don't forget to like and subscribe for more informative content.